What's going on, everybody? TG here, back with another video, and I want to talk to you guys today about why I dropped over $20,000 on Apple and why I think Apple is going to be one of the best performing stocks this next year. There's a lot of news that has come out on Apple recently, and I want to go into all that. Before we do, though, if you guys can just like and subscribe, that would mean a ton to me, and we will jump right into this video. First off, let's start off with my positions in Apple. They're currently not as much as I had initially. I had to sell some to put into some other positions that were down like BABA, but we still have a ton of Apple. We sold the 130 put on it, so that's about 13,000. We have 5 of these put credit spreads, 10 of these put credit spreads, 2 of these put credit spreads, and 12 of these put credit spreads. It's about $20,000 in total on Apple. I really like Apple, and here is exactly why. Apple has had a ton of big news come out recently. This came out just this morning, 4 hours ago, that Apple is using Tesla's batteries to build a new energy storage facility for its giant solar farm in California. Just another expansion of Apple, another way that they can cut costs and increase profits. You know, big development from Apple using their lithium batteries. Another big thing is Apple got another price target upgrade yesterday. Not that that means too much, but it just shows that the street is still very bullish on Apple and really likes it. Apple now has an average price target of $151.96, which is about a 23.18% upside from where it is now. Street high being 175, street low being 83. I think that 83 is absolutely ridiculous. I don't know how anyone could say that Apple's only worth $83, but again, they're analysts and that's what they do. So I want to break down Apple's earnings because Apple's earnings were just absolutely phenomenal last quarter, and I don't think it got the recognition that it deserved because the stock actually went down after they reported earnings, after this just incredible earnings quarter. So let's break it down into each section. First off, revenue. Apple had revenue of $111.44 billion for Q4, which is a 21% year-over-year change. Net income, which is probably the thing I am looking forward to most and most impressed about this quarter, $28.76 billion. That's a 29.3% year-over-year growth. Diluted earnings per share was $1.68. Again, another 34.4% year-over-year growth. And another amazing thing when you have to look at companies like this is their profit margins. How much of that revenue are they actually keeping? Well, look, profit margins are up 6.52% year-over-year, which doesn't seem like a big percent, but when you're talking on revenue of $111 billion, that is significantly higher, 25.8% net profit margin. Cash on hand, they still have $36 billion cash on hand, so they can do things like acquisitions and upgrades and, you know, different innovative workings that can affect their company in a positive way. So I wanted to break down the revenue from each one on that earnings quarter now.
Per share here of $1.68. Street was looking for $1.41. Revenue also better than expected, up 21% to $111.4 billion. Street was closer to $103 billion. Gross margins 39.8%. iPhone revenue up 17% to a better than expected $65.6 billion in the quarter. Services revenue better than expected as well, $15.8 billion. Wearables, home and accessories, $13 billion. Mac, $8.7 billion, and iPad comes in at $8.4 billion. I would also call out Greater China revenue here, up nearly 60% to $21.3 billion in the quarter. No formal guidance from Apple at this time, but we know what Apple executives have been doing, providing more color and commentary on the call. That call kicks off at 5 p.m. Eastern. Back to you.
You know, there are two parts of this narrative if you think about it. One is this is inherently going to keep becoming less about how many iPhone units is Apple selling, but really how we're going to monetize this 1.6 billion iPhones that are out in the wild right now in the install base, right? And on the services side, the way we kind of frame this is, listen, the average iPhone user is spending about $62 a year on iPhone services, right? Compare that metric to what you spend on a Netflix, a Peloton, an Amazon Prime, all these other things. This number could easily keep growing. And as long as it keeps going through install base growth and from new services being offered, we think services alone can grow mid-teens for the next 4 or 5 years. Wearables, really quickly, I think the narrative there is AirPods, despite the fact that, you know, we see them fairly often, it has a less than 10% attach rate to iPhone users. Same is true for Watch, by the way. To the extent that number can get to about 20% attach rate, you should see these businesses grow high teens as you go forward. And that's kind of a big theme of less about iPhones, more about monetization of the install base.
Another amazing thing about Apple is its absolute loyal fan base. America loves Apple. And a poll back in 2017 found that the average household owns more than 2 Apple products. The average American reported owning 2.6 Apple products, and the wealthiest Americans owning 4.7 products per household. People love Apple, and there's a reason for that. The simplicity of the design makes it so easy to use and so easy to keep coming back for it. The compatibility between the Macs, the iPods, the Apples, the AirPods, the watches, they all synchronize well together, and that's why Apple has such a stranglehold on the market of the wearables now, the phones, the services, everything. People, they make it so simple for people to use and so simple for people to keep coming back. And that's why Apple has been a consistent winner over the past couple years. That's why their stock's up 364% in the past 5 years. And I plan on this just continuing to go more and more. Apple is not slowing down in the slightest. If anything, it's growing much more than we anticipated, much more than Wall Street anticipated when it absolutely blew out expectations last quarter, and the stock continues to be a juggernaut over the past year, over 104%. Yes, this is from March, but if you look on it in the grand scheme of things, it is still growing at a very high rate. And there are a lot of catalysts, including revolutionary catalysts that people aren't even pricing into the stock price that can make the stock go much, much higher, such as the Apple car, the amount of impact that this can have on the EV market, and different things such as government tax credits that Apple can receive for selling an electric vehicle is just another thing that will increase profit margins and increase members and loyalty between the customers. I see Apple going much higher over the past couple of years. I'm not worried about this company in the slightest. It has made its impact, and it is made here to stay, and I don't see anything getting in Apple's way. It owns the phone space, it owns the service space, and now they're trying to make a dent in the car space. They've had a big impact recently on the wearable space and have made the iPad so much bigger than people thought. People thought the iPad was dying out, and the iPad just continues to destroy estimates every single quarter. They're really making an impact, and I think that they're just going to continue to innovate and get bigger and bigger over the years. If you want, you own this stock and you hold it. I wouldn't really recommend trading it. If you are going to trade it, here's how I would though. I would go over to the trade options category. If you're on Robinhood, you can do it here. If you're on another broker, you can go to a different one. But essentially what I would be doing is I'd be selling puts on Apple, and I'd own shares as well and sell covered calls. The mixture of this is really good because you can go out far. You can go out to June of next year, so a little over a year. And I actually sold this one on my E-Trade account. I sold the 130 put. Collect $2,000 up front. Your break-even point is $109 a share. You can also do things like selling covered calls weekly. So you have that exposure long-term, and then you can also hedge yourself with calls. And I would do calls bi-weekly, so I'd sell like an April 16th covered call. You own 100 shares, you can go here, sell a $125 or $126 call, and get paid pretty well as well. I mean, you're getting paid $146 to potentially lose your shares at $125. You know, your break-even price is over $126.46. So anything under that, which is, you know, the odds of that happening are pretty high that you're going to make profit on that. You get about a 73% chance. Obviously, the higher you go up, I'd probably pick something like the 126 to be safe. Make a little bit less, but you have a 127 break-even port price rather than a 126. So that's just a great way to hedge yourself, get paid weekly. Plus, if you notice, if you look at these options, the theta is huge. You're gaining $71 a day on these, or $7 a day on these contracts, which is pretty huge. If you want to be paid a little bit less but get more theta impact, you go to one of these, you sell the $125 price up here, and your theta is significantly more on this option contract. It's losing $8 a day, which percent wise on only 61 cents is a lot. So that's basically what I'd be doing. I'd be doing bi-weekly. I'd be getting paid, you know, a couple $100 per contract, and I'd also have those long puts as well. You can also do a strategy of buying leap calls if you really want to have that exposure of Apple. It's going to cost you a lot less. But you go out here, you go to like June 2022, and you buy in the money like a 120 call. It's going to cost you $1,700. But this in the money call will then allow you to sell covered calls as well, in a poor man's covered call. And if you want, I have a video about poor man's covered call you guys can check out on my channel. But that's another way. Or, you know, you can always buy an out of the money one for significantly cheaper and have your upside on that call be greater. But that's just what I'd be doing if I was with Apple. Obviously, staying super bullish. I wouldn't be bearish on Apple in the slightest. The only somewhat bearish position I'd have is just hedging yourself with covered calls. But even that, it can be seen as bullish if you have it significantly farther out of the strike price it's currently at. So that's what I'd be doing with Apple. I love Apple. I'm going to hold it for a while, and you know, continue to profit from Apple Apple's success. So anyways, guys, that's about it for this video. Hope you guys enjoyed. If so, remember to like and subscribe, and I will talk to you guys in the next video. Have a wonderful day. Bye.